Now, the World Gold Council thinks that gold's record run still has some momentum, but there are some conflicting signals surrounding the Gulf's appetite for the yellow metal. We saw a fall in second quarter demand for gold jewellery in the Gulf due to higher prices, while Turkish demand fell due to the high inflation levels in that country. Conversely, Iran saw a rise in proxy investment in gold safety as the situation in the country became very unstable during the US and Iran's bombing campaign. More broadly, the structural tailwinds for gold remain in place, with the technology role still propelling demand alongside weakening US dollar that supports high prices for the precious metal. Gold sitting 28% higher year to date. Let's bring in Quentin Mai now, CEO at West Point Gold, joins me live from Calgary. Quentin, great to have you on Access Middle East. Broadly, when you consider the demand profile, we talked about Asia, we talked about the Middle East in the introduction there. Where are you? What are the implications then for the pricing of gold?
Well, the bottom line is always the US dollar and everything that flows from that. And we're at an incredible inflection point, I think, really even in history right now, because essentially everything that's happening right now is really driving the US dollar down. And there's a lot of movements by a lot of different countries, starting with China, Russia, Iran, as you just mentioned, that are all looking for ways to bypass US banks and not trade goods in US dollars. And the natural way to do that is through gold.
So is the path of least resistance for a weaker US dollar, Quentin, and therefore are you looking at higher gold prices in the short term?
Most certainly, and I think all of the long-term drivers are there, and starting with the sovereign debt, ballooning deficits, money supply, specifically in the biggest kind of issue right now, trade tensions with tariffs that are being put, creating potential inflation across the board. So all of those drivers are going to have a tremendous influence on gold and continue to have so. And as we know, gold actually started to rise even before some of these U.S. government trade practices were being put into place. So that's really torqued the gold price. And with that being said, I think that there's going to be a continuation of an increase in the share price of gold with all those forces that are at play right now.
It's interesting, wasn't it, that second quarter demand in the Gulf was rather patchy for gold. But where are you putting, as a diversification play, central bank purchases on a global level? Have we seen peak central bank buying, Quentin, or is that going to be another factor, another positive catalyst that can lead to the next leg higher in the gold price?
That's certainly a factor, and I think the central banks are on track to buy another 1,000 tons again for the third straight year. It's my understanding the U.S. Central Bank bought 600 tons in the first quarter of this year. So one would think that there's certainly central banks are going to be driving gold, as well as the rest of the kind of the economic and geopolitical forces that are at play here.